right? Uh, so good evening to all of you, to all the wonderful participants, and Amit Bharti, our speaker for the day. This is the 12th session in the series Analytics Wednesday. Uh, I think this Summer Audit Systems and Software Private Limited brought about this series, to uh, took this initiative to bring to the participants, to the audience, to people, professionals, the importance and how analytics can be used practically in their day-to-day working, whether it is accounts, finance, MIS, forensics, internal auditing, external auditing, and so on. This is not limited to analytics alone. We're talking about artificial intelligence. We're talking about uh, RPA. We're talking about visualization. So, if you go to the YouTube and look at the series, the various episodes which are there, uh, there's such a lot of wealth of practical experience from different speakers. So today's topic by our distinguished speaker Amit Bharti is analytics and automation. Automation and analytics using idea or also other technology, whatever is available. So I think he'll share, as he was speaking to us earlier, he will share the generic scheme of things and how it can be done with his vast experience, but he'll not be able to delve into the confidential areas which is pertaining to his organization per se. So, but still, coming from a distinguished speaker with such a lot of experience, I think it will be very helpful to all of us to understand how automation and analytics can be worked upon using IDEA or using any other technology as he speaks to us. I would like to thank the Government of Canada Trade Commissioner Service because they have been supporting this. They have supported this webinar series of webinars that we have been holding, and they have been supporting us in our endeavor in the country again in terms of reaching out to CFOs, CAEs, and also helping out with promotions across the country for Caseware Idea. I would like to formally introduce Amit Bharti before I hand over to him. So he is an associate director in Global Financial Governance Team. So he's with IHG since 2012 and has worked across different functions, including governance and compliance, order to pay, and global accounting and analytics. Apart from core SOX role, he is leading the data analytics initiative in wider financial governance role. This is very important for us because today we have a speaker who is from pure governance, from the finance side. Usually we have a lot of speakers from the internal audit side, but Amit Bharti sits out of India, but he's looking at the global role of what's happening across the world. Since IHG is mainly situated out of North America, China, etc., as we were speaking earlier. So, that's a global role on what's happening in analytics and how analytics can be driven from India, to add value to an organization per se. Amit is a chartered accountant by profession with 16 plus years of experience. Prior to IHG, he has worked with Bank of America, Spice Telecom, and Airtel in business planning and analysis, financial accounting, management accounting, and regulatory reporting role. So I think a wealth of experience which he has with us. So Amit, over to you.
Thank you so much, Deepji. Thank you for the kind word of introduction. I don't think I need to maybe elaborate anything more on my current experience and what I have done. Let me probably start by sharing my screen. Deepji, you're handing me over access. All right, I got it. All right. Good evening, everyone. Maybe good afternoon and good morning if you're not from India. Thank you so much for being able to make to this conversation. And I would like to say this as a conversation because although I will try to put my perspective as to how our journey looked like, but I will be really happy to hear more from you, what challenges you are facing or how you would be really keen on bringing a data analytics side in the finance division yourself. And I think we already have some time blocked at the end for Q&A session, but feel free to jump in, maybe shoot any question in between if you feel like, right? All right, the topic is automation and analytics. So let me start by saying something, which is a famous quote by Alvin Toffler. Alvin Toffler, as you may know, he is kind of American futurist, very famous futurist, and you may be reading a lot of his quotes everywhere. But one of my favorites is that the illiterates of the 21st century will not be those who can't read and write, but those who can't learn, unlearn, and then relearn. Why it has become important, that's needless to say, because all of us understand the importance of why we need to do something different as of now. Technology is trying to rapidly make its inroad in all the areas, including the finance. And if you look maybe 5 years back even, right, nobody was talking about technology as of now, how much we are talking about, right? As Deepji mentioned, right, we are just not talking about a automation through idea or a small tool, but we are also talking about many terms which we never probably heard or discussed 5 years back. Take an example of maybe a RPA, right, robotics that we call commonly, or maybe machine learning or artificial intelligence. Now, at this point of time, we have started talking about all these, but do we really understand what these are? Do we really understand when do we need to use this? And do we really understand the fine distinctions between these terms? Or are we using these terms in a very layman language, right? So quite commonly, if I just take an example of, say, artificial intelligence, are we saying that artificial intelligence is going to be everywhere in next 5 years? Are these going to replace our jobs? How are they going to shape up the finance person's life in a professional manner, right? But do we really understand what it is? Put it simply, I'm not scaling down the importance of maybe AI, but it's simply mimicking a human decision process. Maybe the scale is large, the variables are large, but still, it is only the decision-making part that is being done by AI, which typically may have been made by human, but then he needs or she needs more time to do it, right? Again, so this is AI, right? Then when we talk about RPA or when we talk about automations, these are different terms, and these can bring different values. All of these have got its own merit and its own advantages. And the largest factor that would decide what we are going to do with it is the cost. Whether we need to implement everything at one go or bring something at one place and then see how it works. So as a finance professional, it becomes very, very important for all of us to make sure that we really understand these things in the context that we should really understand in finance world, what value it's going to bring and what these are. This was a brief about why we need to do it, because again, all of us really understand that this has to be done. But how many of us are really on that journey? Because it takes learning new skills, maybe doing away with the existing ways of doing things. And if we don't do it, believe me, 5 years else, after 5 years, maybe IT professional will be doing our job if we don't learn it, because they will learn and try to learn finance. They may not be doing as great job, but then they will have an edge over us. So that becomes very important for a finance professional to learn and adapt to the new ways of working. With that, I will try to maybe walk you through or take you through how the journey looked like for us, so that you can get your own insights on how your own journey can look like. If you have started, maybe you will just echo with my sentiments, how it looked like. And if you have not started, then it will give you some insight as to what the end result may look like. We started with a very simple model. Maybe I will take an example of a journal analytics, which is very common across everyone, and everybody will, all the financial professionals specifically would resonate with this, because journals is something which all of us are more or less having similar challenges, similar issues, and the way we would like to test them may be similar. Any other example like a revenue or an expense or a payroll may have different connotation, different meaning in different organizations. But what I have seen is journals is something that everybody echoes, and it's a common problem for everyone. So most of my examples may be related with journals, but I will try to maybe incorporate other things as well. So typically, whenever you start a analytics journey, this is how it may look like. You start building small models. Over the period, it may become a little complex. And once you're a little very confirmed about your model being working well, then you try to automate it and then bring it kind of to a business as usual scenario. In a journal, the one example which I talked about, a simple achievement or simple model for a journal analytics could be that you're trying to check ledger integrity, whether your opening TV trial balance plus your journals matches up with your closing trial balance. That's a comfort that can easily be drawn through a simple analytics model in IDEA or any other tool. But then slowly, when you start getting comfortable about your data, your information that you are looking at, your model becomes a little more complex, because then you might be looking at things like, for example, let me see what are the sources of my journal, whether I can pick certain risky journals for audit. Your risk criteria can be really, really complex based on maybe 20 or 30 different logics, right? I can just give you a try to give you an example, right? Any journal which has been manually posted more than, say, 100K, posted by a team which is sitting in India, who is posting a journal, or maybe who is posting a journal where the revenue sign has an adverse sign. Revenue has an adverse sign, and it's a manual journal, and it's not a reversing one. So I've added 4 or 5 criteria to one simple thing. But then while doing it, it becomes very, very difficult, because then you have to really understand your data, how it works, and how your workflows work actually. But then once you're a little comfortable with your model, then you can look forward to automating that, right? Because you'd have set criteria, because you know what you need to look at, and then you automate your model. So this is how a typical flow may look like whenever you're trying to bring a data analytics into your process. Now, what will it give us? So what it will give us is that instead of sample, we are able to test a population. Now, not all tests which we perform on sample can be done on population through automations. For example, you can't test whether the backups actually matches with your journal or not. But what you can test at a population level is certainly, for example, whether all your journals have been approved properly. This is something that you can test, whether all the journals have got a backup or not, whether all the journals have got a proper narration or not, right? Is it just one word mentioned in the journal narration, or is it a sentence? How many words are there in the narration? So that you can gauge how your internal controls looks like, how is the governance environment. And there are still a number of checks that you can do on a population. These checks, for example, IDEA has their own list, which they provide, which is a kind of guidance as to what all you can do. So there are a number of tests that you can run on entire population. Moving ahead, typically the approach of an audit had always been a random sample, or it's based on materiality. That had always been the case. But now, slowly and gradually, what's happening across industry is that even the SOX controls, there's a risk-based approach being followed as well. Now, what is a risk-based approach? Something that you seem risky to do. So what you end up doing is that you are eliminating anything which is a low risk. For example, you may be doing something a reclass. Now, are you interested in doing a testing or detailed testing? Maybe not. Maybe intercompany transaction, maybe you're not interested in that. Maybe expense to expense reclass, you may not be interested in that. Maybe a reversal, you are not interested in that. So what is happening across is that with data analytics, you are able to put a risk matrix in the system itself, and then it can throw you a data which you can test. And you can have those combinations, not just one of them. You can have combinations of different rules, different risk criteria, basis which you would really like to test. Now, as of now, this seems like a manual activity because then you are building a model. But maybe in 5 years, all of this would be sitting inside your software itself. For example, if you have accounting software, all those things will still be sitting inside those software. It's a futuristic thing. I would like to elaborate a little bit on it. All the softwares are evolving right now. If you look at the way softwares were maybe 10 years back and now, there's lot many criteria that we can build into the software, lot many rules we can build in the software, and slowly and gradually they are evolving. Most of the softwares are now software as a service, SaaS, that we popularly tell them. But even such software cannot cope up with the increasing demand that we are having on a day-to-day basis. So a best software may not be even able to give you a complete end-to-end result which you need now, because you brought a software, but then is it doing all the things that you need now, or maybe after 6 months? Because building a new rule is very difficult in a SaaS software or software as a service whenever you take them. So there is a huge amount of reliance that is always going to be there in a data analytics tool. Irrespective of how advanced any application or software becomes, data analytics tool will remain there. The way, for example, Excel had been there. In a SAP environment, you get a lot of reports from the system. Still, it's not able to replace an Excel sheet because Excel gives you flexibility to play around the way you would like to. Same way, data analytics tools such as IDEA will help you to do all those ad hoc things or keep up with the requirements which any software cannot. So that's the case for any software that we are using for data analytics. Moving ahead, typically any audit or any internal audit activities are more of a very detective process. Unless you are checking a process, how it works. Typically, it becomes a detective process that event has happened. Now you're looking at it, how or what has gone wrong. With data analytics, you can start having a change in the way you look at the data because it will tell you stories. Once the stories are coming out of your data, then you can have a preventive approach rather than trying to have a detective approach. For example, in my previous point, which is risk-based sample, once you have identified what is a risk in your system after your data analysis, then anything can follow such rule before it has happened. For example, a journal. If you think that a particular kind of journal is a risky journal, right? It may be based on threshold, it may be on past behavior, it may be based on any particular combination of cost center or account or teams who are posting those journals, or what is a combination of the journal entries, what all combination of account it has. Once you have identified those, you can put a preventive system in journal workflow, for example, so that such kind of risky journals may go for additional approval or maybe a compliance approval if required. So slowly and gradually, as and when you get a little more comfortable around the data, you can build all those rules, and your data analytics cannot just help you in detecting something, but helping you put those preventive measures in the system itself. Lastly, it is actually moving away from audits and going into the insights. Audit is going to be there, right? The approach may change, the sample strategy may change, but the data analytics will help you to bring right meaningful insights into your system, into your finance world. And with these insights, you can do wonders in finance world, because then you don't just become a financial governance, but then you are partnering with business actually. You can tell them how the performance really looks like, not in terms of just the total numbers or the control totals, but how the patterns looks like, where are the deviations. And these deviations may not be noted easily because again, numbers are being looked at totality level. But when you use an analytics tool, it gives you many more insights than you have earlier thought of. So it's about moving from audits to insight and then enlarging the role of a finance professional in a very rapid manner, where you start partnering with business in day-to-day decision making. So this is what in general a approach or your journey may look like in total. But then what does it take? So let me try to cover that aspect as well, as to what does it take to take this journey, because again, these are results, not the process. Now let me try to take you through the process actually. Now, why we actually had to go for a software like an idea or an analytics tool. So the journey began for us 3 years back, and at that point of time, one of the mandate from the top was that we need to do something in analytics in the finance world, because the reason was at that point of time, to be apparent, is our auditors are also doing it. So we don't want to be lagging behind. We don't know. So it came from a source of skepticism that we should be knowing what auditors know. So the origin may not was coming out of fear, but then it took us to a journey, and the result was very different from how we imagined. So the initial challenge which came to us is that why can't we do it in Excel? So when we looked at the journal dump, let's see how many journal lines are there. What is the size of the data? And we realized that the size of the table even was more than 1 GB, something we never imagined we can even open in system. Another challenge was not just the size of data, but the size of data was because the number of lines it had. So it ran into hundreds of million, literally. So it was overwhelming. We never thought something like that would be possible. So we started looking here and there, asking our friends, colleagues, whomsoever we know, doing Google searches, and then we came across the software idea and other ideas, other softwares as well. We did some evaluation process and then ultimately went ahead with idea software. So this is how we were kind of forced to start. But then if somebody is not forcing you, it is still a good time to start, because whatever investments are being made there, it's going to give you huge benefit. And that's coming from the experience that we had from last 3 years. So it's the third year we are using the software, using data analytics, and trying to bring data analytics in the mainstream of global financial governance. Any questions so far, or we are good to move?
I think good to move, Amit. Maybe we can take up questions at the end if they want.
Sure, no worries. Thank you so much for your inputs. All right. So what does it take? So for us, as I shared, what started us getting started, what started us in this area. But then for any organization, what we felt is that having a mandate from the top is really, really important, because this is just not about your own team who is going to do it, because you will need support from many teams. And there will be a lot of skepticism around, because again, you don't know how the success may looks like, how much time it is going to take, how many support teams you would be leaning to. Because when we started, even getting the data, right, 1 GB of data was very difficult, because we never knew how we can extract it from the system, whether we will have access to not. So it required massive collaboration with IT teams, with the processes as well, because once you start looking at data in terms of data tables, it is a very difficult thing, because when you post a journal, maybe you are looking at 10 fields, but when you look at the entire table, it may have 50, 60 columns. It is overwhelming at beginning, but then slowly and gradually it will start making sense. But then for this, you need support, not just from the IT teams, but definitely from the people who are running those processes. They understand those processes. At times, they may not be even aware what those fields are, but then they can guide us in the right direction. So having a mandate from the top is very important. And this is which we tried doing it. We anticipated it. And then we tried bringing everybody in confidence that this is what it will take in future to do it. Another challenge that came across to us once we had that mandate is that, again, it's a software. It's an analytics software. So it may require something technical that we may not know. So how much learning would be required? So finding right people for that job was difficult. And the reason it was difficult because we needed people who have got understanding, or say fair understanding of all the systems, all the processes, and have slight inclination towards a IT-driven mindset, or having an analytical approach, or having a problem-solving skills. So getting those dedicated people was a challenge, but fortunately we got. And then came the part where we had to maybe unlearn and relearn something. So we had our old ways of doing things in Excel, relatively easy if data is manageable. And then every time we will go to Excel instead of maybe Idea, because it was easy to do it Excel. But then you have to change that. Again, that unlearning is required because of the benefit that you can reap if you use an analytics tool. Now, what are those benefits? One, you can handle massive size or handle massive data sizes, which you cannot possibly imagine do in Excel. Second is the repeatability. Once you have put a data into the system, you don't have to worry about it again. If you've done any step, repeating it or doing automation around it is quite easy. So that unlearning and relearning process happened for us. It took a while, but then we did it. And then we also needed quite a bit of time because the initial phases are very difficult. Results are slow. At times, it seems wastage of time because it takes time. Believe me, first time it really requires a lot of effort because again, one, you are learning a tool, you are learning a process. Secondly, you are making sense of the data which you're looking probably for the first time in its entirety. So a dedicated time, my advice would be just make sure that you have dedicated a good amount of time towards it. If you think you can take it simultaneously with 10 different things, you will invariably be failing because it requires time and it requires a dedicated time. So make sure while you are onto this journey, you have set yourself a specific time. A time frame is good because then it helps you to focus. So, but dedicated time is really important in this. And that's how you can get started. And that's how we started. If we go to the next stage, now it comes about building that really model. Based on our experience, we thought we understood data, but when we started looking at the data, we really struggled a lot because the data and the results that we see may look very different. When you are scrolling through millions of lines and looking at hundreds of columns, though overwhelming, creates a lot of confusion. Even I can give you specific examples. For example, there may be 10 different columns for date. Now, which date is relevant for you? In a journal, it could be a starting date. It could be a journal when it got posted. It could be a date when everything got approved but not posted. It could be a date when it was altered later. So even for a small field like a date, you could have so many variations. And believe me, people won't know because they never needed to know what those are. But while you are playing with tool, on that data, it will become really important for you to understand those data. Even for amounts, there could be maybe 5 or 10 different columns, because something may be in local currency, something may be in a base currency, or something could be in a reporting currency. Some other amounts could be line level detail. Now, even for example, journals, I can tell they are header level information. There's a line level information. There's approval level information. And even you may not have just one data set for a journal. You may have, say, 5 or 6 different tables, and 5 or 10 massive tables to look at, and then connect those dots, link those tables, and then try to do something meaningful out of it. So understanding the data source is really, really important. And this is the first phase which requires maximum time. I will tell you what takes the maximum time after this. But this, believe me, this is something that's going to take most of your time, because at times what happens is that if we don't enough time, we end up building a model which is based on an assumption which is wrong. So your model is as good as your assumption. So if your assumptions are wrong, and believe me, there would be huge number of assumptions that you would be making, because you can't know everything. You see a field, you think this is what it is, what else it could mean, but it may mean very different when those outcomes are being reviewed. And we have seen this happening to us also, and across other friends who are into analytics world. So it becomes very important for you to understand the data. Now, other than the data as well, it's important to know from where those data is coming, and you need to have a really good understanding. In journal, if we talk about just the journals, it may be coming from 5 different subsystems. It may be coming through a uploader. It may be coming through a application which is outside your main accounting application. It could maybe a manual journal. Now, understanding those data source will become really important. One of the challenges, for example, which we came across was that some of the sources from where the data was coming to the main GL, it did not require any approval, because there are controls built in other systems. But then we didn't have understanding. We always looked at the GL side only. So it becomes important as to what data is coming from different systems, different sources, and it requires good amount of effort, because you may not have looked things in past that you are required to look into it. So understanding data and data source is going to take maximum amount of time, and don't worry about it, because the later part may take lesser time, but then this requires a lot of time. And the second thing that takes most of the time is the data cleansing. As I said, the journal data may have hundreds of columns, but what do you really need? You can't eliminate something which you regret because you may have built your entire model. Now, one field you missed because you removed it from the source. Now you're finding it difficult to add. So whatever you need or you don't need, it is really important to understand what all is relevant for you. It may not be able to, or you may not be able to achieve it at one go. It requires massive review, revalidations, but then any amount of data cleaning that you can do in the beginning would really help. Now, there could be a scenario where you really don't want to look at outliers. Now, this is also something you can do in IDEA or any analytics tool. So if you don't want to work on your outliers, then make sure that you have got right rules, right? For example, anything more than 10 standard deviation or maybe 5 standard deviation, you don't want to look at it. But then what it will require is that you need to have a good understanding of your data, because what is the outlier? This is something that you are going to assume. So that requires partnership with business, process, and having very thorough understanding of how overall data may look like. So data cleansing is a very, very important part, and then it is something that will take most of your time after understanding of data. Now, once you have your data ready, then you need to define. And the reason I did not say that define your outcomes very clearly, because when you start, you have a not very clear idea of what you will be able to achieve. So even if you don't have a very clearly defined goal in the very beginning, it's okay. You should have a fair sense of where you need to move. But once you start getting feel of the data, that's when you need to clearly define what are you going to do with it. Then these goals or outcome have to be defined very clearly, because then there are quite a number of things which are good to do, right? Okay, let me see how many journals are getting posted on Saturday, Sunday, but is it important for you? Or maybe how many people are journal, or which person is posting most of the journals? So all those insights can be driven once you have a data in system, but then is it a good to have information that you're wasting your time in, or is it something that gives you a meaningful insight into the things that finance world would be interested in? That is a stage when you clearly define your outcomes, and this has to be done in collaboration with your senior partners who are going to make decisions based on your reporting. So that's a collaborative effort of coming out with the outcomes. Still, we don't know whether you will be able to achieve 100% of it, but then at that point of time, you should really know what you're trying to achieve. After that, you'll be building your model based on rules or whatever your goals are. And once the model is built, it would require revision, because every time it's being done for the first time, it will have loopholes, it will have gaps, it will be filled with wrong assumptions. And then you have to review it, validate it, and change your model. That's going to be true for any new model that you're going to build. At first go, your outcome will not be right, because again, the way you understand your data, the way you have taken your assumptions, way you have handled your data may not be 100% accurate. So a thorough checking is required, and that is the when you would need help from business as well, because then you try to get the outcomes validated by business, whether it is making sense or not, and then change your model if it does not work for you. Now, this is a kind of continuous process. It keeps happening. You build a model, you do those validations, change model, and then try to perfect it. One of the mistakes that we did is that we invested good amount of time building the model, perfecting it, and when we were asked as to, okay, how does this looks like, then we start preparing kind of reports, dashboards, etc. And we really invested a little bit of lesser time than we were supposed to. Because if you're not reporting it well, if you're not conveying what is the outcome clearly, then whatever you have done will go in vain. Because management is interested in the outcomes, not in that you have got a very fancy jazzy model. So it's very important that it's been conveyed well to the management. So any reporting process will start like you prepare a report, you make corrections, you optimize it, and then you top up with good amount of data visualization. And then you can use quite a number of different tools which are available in the market, maybe a Tableau or maybe a BI tool to make that. And you can utilize some of the tools which are already available in IDEA. Or you can maybe export a summary to Excel and then probably prepare some nice visualization there. And then you are going to publish it to the right audience once you're comfortable that this is something that management would be interested in. And then your job does not finish here, because they may not understand the insights that you're trying to sell to them. So it's important that you set aside specific timelines and then make sure that you take them through your report that you have published. If you have not done this, your entire process of developing and maintaining your data analytics around financial processes may go in vain, because if it's not being conveyed, the outcomes are not conveyed properly, then believe me, it's an effort wasted. So make sure that from our experience, that's what we missed earlier. We did a lot of work, but then we failed to convey it, the effort was wasted for the year, because then we were not able to convey it properly. But then we took our learning and made sure that we are investing good amount of time in reporting as well, in conveying your ideas, because that's the final outcome. That's the final outcome. This is how it will end for you. And then you can focus on something else. Any model, so that's the cycle. But then any model which you build may not serve you forever. It requires upgrading. Our own journal analytics model that we did has gone upgrade maybe 6 times in 3 years. Almost every 6 months it went an upgrade, because we added more things to it, or maybe improved it a bit based on the additional insights that we got. And once management got comfortable, they started asking for more. Okay, can you add this? Can you add that? And this is how it typically happens. Once everybody is comfortable that you are able to give those insights, then the upgradation will become a very, very important part, and it's going to continue. You can't leave any model in between, that it will be running on its own for a very long time. It requires revisiting. It requires perfection. It requires whether it is serving your purpose, still serving your purpose or not. And one of the examples I can think of, that we started some analytics report around payment fraud. And then we did it for a couple of years, and then we realized that nobody's looking at it. Why? Because probably earlier people had certain perception about where the risk lies. Now they are comfortable that that area is not risky. So nobody is actually looking at it. So that's why all your model needs revisiting, checking with business whether it is serving their purpose or not, whether it is still relevant or not, or whether you need to add something to it to make it relevant. Simplification of models is also a very important step. When we started building this journal analytics for the first time, we created almost 50 or 60 different tables out of the original table. So data start running into 50 or 60 GB, because we never knew how to go about improving it. So we added one layer after another, another layer, another layer, another layer. And if you're using Idea tool, you may be aware that if you are doing additional step, it creates additional file, because it helps you to automate it later on. But then there are a number of things that you can do in one step. That's why it becomes important for you to simplify it. And the simplification also helps somebody who is not an expert in the model to maintain it. Because you won't be, people who are developing the model won't be working day in, day out on those models to churn out routine reports. So it becomes important that you have standardized it, simplified it, if required, split it or consolidate it, and then make the model very simple for anybody to follow. And once in a while, as I mentioned, you need to revalidate your model if it is still serving your purpose. And if everything goes well, then automation is the way. So you automate it, let it run its own course till the time it is serving you. Make sure you're revisiting it, but then you can automate it. And this is the way a typical cycle will happen. It happened for us. It can happen for any other organizations who are willing to take this path. It's a long road, but that it's a journey worth traveling. So for us, it had been a journey, a difficult journey in the beginning, but we were patient. And then now we are reaping the fruits. So we have got those analytics placed now, not only just in journal, but in revenue, in payment analytics, in fraud analytics, payroll, and quite a many other areas. So it has become a way of the way we approach global financial governance in our team. And over the time, it is just not the models that we talk about. So you may have developed 5 models, 10 different models, which may be serving its purpose. But with our experience, we can tell slowly and gradually, management will start relying on your data. And then you will have more ad hoc tasks than you have routine tasks. Because then you start helping them in taking big decisions. Last year in our COVID situation, everybody was very keen in preserving cash. Everybody was trying to make sure that we don't have any payments which are avoidable to happen. Now, how to take those decisions, what it will take if you change any approval criteria, for example, right? For example, earlier the approval limit was 100, you brought it down to maybe 10. So how it will impact people? How much is the volume? How much is the effort? All those analysis can be done using IDEA. And I'm quite proud to say that we helped management to take quite a number of decisions in the last 2 years because we had the data, we were able to give them insight quickly and reliably. It is quite easy sometimes to make an insight, but whether that insight is correct or not, that can come with experience only. And once you start churning your reports, your insights to management, slowly and gradually they will become comfortable with you. And then it will become a part of your routine. But then it's the journey that you have to take. You won't be reaching out to the destination directly. You have to travel that tough path. That's the high level of what it took us and what we did. I will be happy to take any of your questions, any of your queries.
Thank you very much, Amit. Really wonderful, because this practical down to earth presentation, it sounds very simple, just 2 slides, but it takes few years to happen. The actual work to be done on analytics on the ground is, it takes a lot of time and patience before you can reap benefits out of it. There can be some few ad hoc analytics which can give you immediate benefits, but if you need to build a risk model, if you need to look at the total data at an organization level and then come out with a lot of fraud analytics or payroll analytics in different areas, revenue, expense side, JVs, then I think it takes a lot of time and effort. I have 2 questions to you, Amit. One is, what's the structure like? Does finance and accounts happen for IHG from India? Does the review happen in India, or how does it work, for around the world? And who is the recipient of all these reports? When we talk about management, where does it go? It goes to business process owners around the world, or it goes to a particular set of people in North America, or how does it work?
Right. So when I talked about all these, so I am coming from a global financial governance background. So, for example, my boss would be the head of global financial governance. We roll up into him. And India Center, for example, or the areas that we typically look at, although we are looking at global, but then India has got all of the accounting functions right till closing, right from transaction-based process to closing. So that ways, there's a huge amount of data sitting, which are originating from India, because the entire accounting is here. Closing process happens from here. Payroll, etc. So all the functions, the base accounting functions, etc., happens from India. So for us, the primary recipient is, while the accounting teams would take up any new project. For example, any new software being brought. So how it is going to change the financial landscape. Or take an example of how are we going to assess the risk for doing the control testing on an annual basis? Does it impact my current assessment? Can I change my assessment for this year and maybe reduce some of my scoping? So the scoping exercise for the entire audit, right from internal audit or a SOX governance framework, happens for this route. Now there are different teams who are owning different areas. For example, accounts payable may be owned by one team, revenue may be owned by other team. So if we have any finding in accounts side, right, any fraud being detected or any suspicious activity being noted or something that did not follow a proper approval, then the recipient becomes that particular accounting team. Since we are operating in the finance governance team, that's why most of our recipient of this information would be finance teams only. But then once in a while, it may be going outside finance team, maybe a marketing team or somewhere, because of the insights that we got that we never planned. But then while looking at the data, those things becomes available to us. So primarily it is a finance team, but then on and off, it may be some other teams as well, maybe a payroll team, or maybe HR team, not a payroll team. They are part of finance, but kind of a HR team. So these things depend upon what area we are looking at. But as you asked, it's primarily the finance team which are interested. In general, for example, CFO are quite interested. CFOs of our regional CFOs are quite interested if there's any policy matter to be changed and that impacts them. For example, if they are changing a approval limit, how does it impact? If they are changing a general approval limits, for example, how does it impact? How is the credit card expenditure across industry look like? So this is something a CFO is always interested in. More particularly this time where cash is something that everybody would like to preserve. But then in general, it is accounting teams or finance teams which are the prime recipient of these reports.
Okay. There's a question from Prasad Shivsagar. Can you specify about how you help managements in COVID situations? Can you elaborate, please?
Right, definitely. This is something which I touched base very briefly. In COVID situation, there were two main areas that we had to focus upon. One was such times, what happens is employee attrition, forced attrition would happen, furloughs would happen. It's a indirect psychological incentive for somebody to make a fraud, right? As if that a person can commit those frauds because that person is impacted. So on top of management mind was that one, let's prevent frauds. So that way we made sure that all the touch points where there could be a cash outflow, we have got some way of controlling and reviewing them on a regular basis. For example, in a credit card, right, we start looking at if there's a periodic trend of a credit card expenditure. Now, since business is not, nobody's traveling, right? So typically there should not be any travel expenditure. Even credit cards should have a minimal usage during those times when everything is locked, nobody's traveling. So this one area was the fraud side. Second area was to conserve cash. What rules are required to conserve cash? So additional, for example, whether it will take reducing the approval limits, whether it will take additional budgetary constraints, so what it will take to conserve those cash. So cash and fraud were the two major areas which was top of the management's mind to take care on an immediate basis. So policy changes is something that we supported management with to make sure that they are aware what is the impact of their decisions on operational side. And second was review of such suspicious transactions on a regular basis. This is something that was immediately implemented last year after the March month to make sure that we are safe, at least in those two terms.
Great. I think, Amit, I think this is good because I think most managements across the world, were interested in conserving cash, looking at the working capital, revenue flows in accounts payable, accounts receivable, inventory, etc., where they were manufacturing, and also fraudulent transactions, which were on the increase, because of the digitization, increased digitization and work from home. Though there were security protocols in place, but there was a lot of concern about that, and it suddenly jumped. You can see from statistics that fraud, cyber crime has increased a lot. So I think good, great. Any other questions for Amit, please? These are Amit. Just one more question. These are general financial governance analytics which are applied to the finance data across the world. Very important, very good. Are there specific analytics which you built or that does team build for the hotel industry per se? Or there's a separate team which does it, or how does it work?
Right. So the scoping becomes very important while you're doing it. So one thing probably I should have mentioned before, you need to know what is the area which you operate in, right? So we operate in the finance side, not in the operation side. Now, in a hotel industry, for example, there will be huge amount of data related with the customer's check-in, right? How much we are selling the room for, right? Now, that's not an area that we venture on. So we limited our scope only to the areas which are related with the finance side. Once something has entered into our books, which impacts our accounting side. So business analytics in itself is a huge area, which is quite bigger than the finance area, I would say, because it has much more dimensions than the accounting side of it. And there's quite a behavioral items which are there. There are quite a number of, I would say, parameters that get involved, and even the source of data becomes huge. So you suddenly start, so as of now, I said that I had 1 GB of data for journals. When you start venturing into the operational side of it, you suddenly may have big data, something which is running not only in teradata side, terabytes, but probably more, maybe in petabytes, because then you have got thousands of transactions happening every second. So that ways, it is very important for you to look at what area you operate in. And we have very intentionally, clearly, not ventured into that area, because again, there are other teams who would take care of it. We restricted ourselves only to the finance area.
Okay. Thank you very much. I think if there are no other questions, I think you can, I would request all the participants or anybody who looks at this video later on also, that if you have any questions, you can write in directly to Amit Bharti, or you can write into us, and we will send forward your query to him, so that, we can discuss as professionals, whatever is possible in the realm of general discussions, as a professional interactions. So since there are no other questions, just some comments on excellent presentation, good presentation. So with that, let me thank you very much, Amit, for spending your valuable time and your insights and taking the trouble to explain how you have applied analytics to a financial governance, because we find more and more finance review teams, governance teams, payroll teams, accounts payable teams in India, because a lot of work is getting offshore, outsourced to India. And there are a lot of Indian professionals working in that area, trying to analyze data, trying to find outliers, trying to see how well the process is managed for processes around the world. So I think this is a very good example of financial governance, which you have given with all your experience. So thank you once again for spending time with us, and a wonderful presentation. To all the participants who are present, thank you very much for attending this session. And next week, we will again meet next Wednesday with another webinar, another episode of Analytics Wednesday. So thank you once again, Amit. Thanks a lot to the participants. Good night. Goodbye. Thanks a lot.
Thank you from my side as well. Thank you all the participants, and thank you, Deepji, for this opportunity. I really appreciate it. Thank you.
Thank you, Amit.
Thank you.
Thank you.